Buying a house in 2025 is no longer just about saving up for a big down payment. With home prices rising, traditional methods of purchasing property are becoming less practical. In fact, the average down payment in the U.S. is now around $63,200, an amount many buyers simply can't afford. But there's a way around this. Alternatives like seller financing, down payment assistance programs, and government-backed loans are making it possible for buyers to secure homes with little to no money down. These options might sound too good to be true, but they're becoming increasingly common. So, how exactly can you buy property without having to break the bank? Seller financing is like a shortcut to buying a home without a bank. Instead of relying on a mortgage lender, you can negotiate directly with the seller. This means the seller becomes the lender, and you make monthly payments to them instead of a bank. The beauty of seller financing is that it can be more flexible than traditional loans. You might be able to work out terms that suit you, like a smaller down payment or longer repayment period. Seller financing is especially useful in markets where banks are more cautious, or if you have less than perfect credit. Plus, it can speed up the buying process since you're cutting out the middleman. In fact, about 10–20% of homes in certain markets are sold this way. But before jumping in, it's important to make sure both parties understand the terms. Let's move on to another popular option that could help you with home buying: lease-to-own agreement. A lease-to-own agreement is like a trial run for home ownership. With this option, you lease a property for a certain period, typically 1–3 years, with the right to purchase it later. A portion of your rent payments is often credited toward the down payment, making it easier to save for the purchase. Many first-time buyers are turning to this option, especially those who need time to improve their credit or save up. In fact, 79% of Americans have considered rent-to-own arrangements at some point. It's a great way to lock in a property price today and buy it at a later date. Plus, you get to live in the home and experience the neighborhood before committing to buy. But it's not without risks. If you decide not to buy, you could lose any money you've paid toward the down payment. Let's explore another strategy that doesn't require a down payment at all: government-backed loans. Government-backed loans are a game changer for many buyers. The most common options are FHA, VA, and USDA loans. These loans make homeownership possible for people who might otherwise struggle with hefty down payments. FHA loans, for example, only require a 3.5% down payment, making them more accessible to first-time buyers. Veterans can take advantage of VA loans, which often require no down payment at all. Even rural buyers can benefit from USDA loans, which offer low interest rates and zero down payment for homes in eligible areas. In 2025, nearly 30% of home buyers are using government-backed loans to secure their homes. The best part? These loans have lower credit score requirements, meaning even buyers with less than perfect credit have a chance to own a home. If you're eligible, these loans can make a huge difference. Let's now look at a strategy that requires little to no capital: wholesaling. Wholesaling real estate is a strategy that requires minimal capital, yet offers significant potential for profit. Essentially, wholesaling involves finding properties under market value, putting them under contract, and then selling the contract to another buyer, usually an investor, for a fee. This means you don't actually buy the property, you're simply flipping the right to purchase it. The key to wholesaling is spotting deals that others might overlook. It's a numbers game, and with the right strategy, you can make thousands without ever owning the property. In fact, some wholesalers make as much as $10,000, 0 cents, to $20, 0 cents per deal. What makes this strategy so appealing is that it doesn't require huge upfront costs or the need for financing. It's a great way to get your foot in the real estate door and start building a network of investors. Now, let's shift gears to another option for getting into a home with little to no money: down payment assistance programs. Down payment assistance programs are designed to help first-time homebuyers cover the cost of their down payment. In 2025, over 2,400 of these programs are available across the U.S., offering both grants and low-interest loans to eligible buyers. Some programs provide as much as $25, 0 cents, to help with down payments, making homeownership more accessible for those who might otherwise struggle. One of the most appealing aspects of these programs is that many grants don't require repayment. In fact, nearly 73% of these programs are dedicated to helping with down payments and closing costs. Whether you're a first-time buyer or purchasing in an underserved area, these programs can make a significant difference. But eligibility requirements vary, so it's important to research the options available in your area. Let's take a look at another popular choice for securing home financing: government-backed loans. Government-backed loans offer a lifeline for buyers who may not have enough saved for a traditional down payment. Three primary types of these loans are FHA, VA, and USDA loans. FHA loans, for instance, allow buyers to purchase a home with as little as 3.5% down, which is much lower than the average 20% down payment required by most conventional loans. For veterans, VA loans offer no down payment at all, making home ownership more accessible for those who have served in the military. Similarly, USDA loans are designed for rural home buyers, offering zero down payment and competitive interest rates. In 2025, nearly 30% of home buyers use these loans. As they come with more lenient credit score requirements, if you're eligible, these loans could be a huge asset in securing your dream home without a large upfront cost. Next, let's discuss a method for buying property with a bit more creativity: house hacking. House hacking is a brilliant way to buy property with little to no money down while also generating income. The idea is simple. You buy a multi-unit property, live in one unit, and rent out the others. The rental income from the other units can cover your mortgage, or at least a significant portion of it. Some house hackers even end up living for free. This strategy is growing in popularity, especially among first-time buyers, looking for ways to make home ownership more affordable. In fact, more than 25% of first-time home buyers use house hacking to ease the financial burden of owning a home. Not only does it help cover your expenses, but it's also a smart long-term investment. As your property appreciates, you build equity while your tenants help pay off your mortgage. Let's now look at how forming partnerships can help with property purchases with little upfront cost. If you don't have the capital to buy property alone, teaming up with someone who does might be your best option. Joint ventures and partnerships allow you to pool resources, share the risks, and split the profits. In these partnerships, one person might bring the financial resources, while the other brings the time, effort, or expertise in managing the property. Certain retirement accounts, such as 401ks or IRAs, allow you to borrow or withdraw money for a home purchase. For example, you can withdraw up to $10.00 from a traditional IRA for a first-time home purchase without paying the usual 10% early withdrawal penalty. Or you could take a loan from your 401k for up to $50.00, or 50% of your account balance, whichever is less. While this can provide quick access to cash for a down payment, it's important to carefully consider the long-term impact on your retirement savings. You're essentially borrowing from your future, so ensure you can repay the loan and manage your retirement funds effectively. If you're interested in using retirement funds for a property purchase, it's essential to consult with a financial advisor to avoid any surprises. If this information has sparked your interest, don't forget to like, share, and subscribe for more insightful tips and tricks on real estate and finance. Stay tuned for more.